Hi friends, I welcome you to the next video on final accounts. In our earlier videos, we have learned the accounting for accrued expenses, outstanding expenses. We have seen how to deal with different situations of accrued and outstanding expenses in your final accounts problems. We will continue with that. You are given here a trial balance. Trial balance as on 31st March 22 is given to you. That means we are talking for FY 21-22 12-month period. You are given some balances in the trial balance. You are given an extract of a trial balance. This is an extract, means not the complete trial balance, but a small portion or the part of the trial balance is given to you. Salary is given as a debit balance of 1,10,000. Interest expense is given a debit balance of 92,000. That means these both are expenses because they are showing debit balances. And now you are given some adjustments. Now that means it is some additional information given to you. Accrued salary not recorded 10,000. Accrued interest not recorded 18,000. So what the problem is saying is that there are some accrued salaries. That means salary has been incurred by the business but not yet paid, 10,000 rupees, which has to be now recorded. Similarly, interest expense has been incurred by the business but it has not been recorded, 18,000. And if you see the trial balance, inside the trial balance there is no outstanding expense, or there is no accrued interest, or there is no accrued salary, or there is no outstanding interest inside the trial balance. That means the ledgers for accrued salary, accrued interest have not been opened. They have not been opened because relevant entries have not been passed. So for these two transactions, we have to pass entries and give effect directly in the final accounts, because we are already preparing the trial balance. Or what you can do is pass the entries, give postings in the ledger, redraw your trial balance, and with the redrawn trial balance prepare your final accounts. Okay, but we won't do that. While preparing the final accounts, we'll give the impact straight away of these missing entries in the final accounts. So how are we going to prepare? I'll prepare the small P&L account because there is no item affecting the trading account. Profit and loss account for year ended 31st March 22 and balance sheet as on 31st March 22. These are my liabilities, these are my assets. P&L account debit side are expenses and credit sides are incomes. So we are given salary. I will write salary in the P&L account debit side, but in the inner column because I have some adjustments to make. There is some interest expense which is also transferred to P&L account debit side. The interest expense amount is 92,000. So I'll write in the inner column 92,000. Now we are given some adjustment entries. Accrued salary not recorded 10,000. So what is the entry I pass for accrued salary? I'll pass the entry salary account debtor to accrued salary 10,000 rupees. This is the entry we pass for accrued expenses. So I'm treating the expense, but because I have not paid the money, I'm recognizing the expense, but because we have not paid the money, we are remembering a liability. This is the name of a register where we are going to write the names of the employees to whom we owe money. This is an expense, nominal account debit. This is a representative personal account, giver, credit. So that is the logic we follow here. So how to give impact of this entry? Because of this entry, salary account should be debited. If you see in the problem, salary account was already showing a debit balance. There's already a debit balance. This entry is asking you to again debit the amount. That means you have to increase the balance. Because salary is already sitting in the profit and loss account, I'll go there and write add outstanding 10,000. Outer column 1,20,000. This is the impact of the debit. Now what is the impact of the credit? Because of this entry, now in the background, a new account will get opened. Accrued salary account. And you will credit it by salary 10,000. Now this account is showing a credit balance. This is a personal account showing a credit balance. Business owes money to the employees. So till the time we repay the money, we are going to show it in the balance sheet liability side, 10,000 rupees. Next, accrued interest not recorded, 18,000. We have taken loan from the bank, and by the end of the year some interest has accrued. That means we have used the loan amount for some days, but we have not yet paid the amount. So interest is accrued, so you have to recognize it as an expense immediately. Interest expense account debit. How much was the amount? 18,000 to accrued interest account. What will be the impact of this entry? Because of this entry, interest expense account has to be debited. It is already showing a debit balance. If you again debit it, I'll add accrued here, 18,000. I'm sorry, here also we should use the term accrued, not outstanding. Accrued 18,000, so this will become 1,10,000 rupees. And this debit item has been added here, and this credit item will be shown in the balance sheet liability side. Accrued interest 18,000 rupees. So this is how I deal with it in the final accounts of 31st March 22. Now let us come to FY 22-23. That means the accounts which are going to start on 1st April 22 and on 31st March 23. Now, if you observe from the balance sheet, two accounts will be opened in the books of the next year, that is accrued salary and accrued interest. When we pass the opening entry, these accounts will get opened in our books. It will have credit balance, salary 10,000 and here 18,000. Now what will happen in 22-23? When these salaries become due and they come up for payment, we'll make the payment. So when we make the payment, we'll simply write accrued salary account at R2 bank 10,000. We are repaying the liability. Accrued interest account at R2 bank or cash 18,000 rupees. With this, these accounts will get closed. When we pay these amounts, we are not going to debit expense again. When we pay accrued salary, we'll pass the entry accrued salary account at R, because we are repaying the liability now, to bank 10,000. Accrued interest account at R2 bank 18,000. So this is how we are going to treat them in the next year's books of accounts. So this is how you deal with accrued interest, accrued expenses when they are given outside the trial balance, when proper entries have not been passed before preparation of the trial balance. Thank you.